Market recap micro NQM, which is June contract, and today we're gonna do the review of yesterday, which was Monday no news day, and Tuesday no news day plus day before FOMC. So in this video I will explain you what my bias was going into the day, and for this week what am I looking for. And what did I do right? Did I do wrong something, or number of trades I took? What trades I took? How I come to an conclusion to take those trades? Everything will be disclosed. So stay tuned and let's begin. This is the daily chart, and I always start my bias or like top-down analysis from weekly time frame. Going on to the weekly, we had this previous week doji close, and this was this previous weekly close took this major two liquidity pools. After that, I was expecting the price to open below the midpoint and then start to displace lower and reaching for these sell side levels, which is the monthly IRL on the higher time frame I'm looking for. August low, this sell side low, which is September low, and eventually reaching for July low. But this is a long time perspective. On the daily, we had this huge consolidation range from last month, or I can say since February, if I can show you in a clear. So this is start of Feb 4th till now. We are in the daily consolidation. When daily is on consolidation phase, the lower time frame are gonna be low probability. Price will not be able to move freely. It is being held over here for a bigger reason, bigger perspective. And once those perspectives or those goals of market maker are achieved, they will let it loose from this consolidation and allow it freely in a direction which they want to take it to. For us, I can say this was the consolidation, as you can see. So my initial idea in the market was, as long as we stay below the midpoint of this consolidation, then we will likely see lower prices going into the sell side levels. If we give a body closure above the 50%, this big green line is the midpoint of this consolidation. If we can get close above this on a daily candle, then we can start to look for the buy side level, which is these relatively equal highs. So this is the high from Thursday, March 5th, and there is this close high of March 10th, Tuesday, and another swing high. So this is a swing and this is a swing. So these two are the initial target which I'm looking for on the daily. But intraday, as we can drop onto 4-hour time frame, as you can see. So this was the daily wick levels. I graded the lower wick, which is this. So from here to here, if you can pull your fib, I can toggle this and I can show you. See, so this is my fib, which is 0, 25%, 50%, 75, and one go gradient level. So price tried to reach to the midpoint, didn't give a close through it, instant pullback to this daily fair value gap. Tap it yesterday in a very high resistance manner, and today did the same thing, which you will see on the lower time frames. As you can drop on 4 hour time frame, you can see we had this 4 hour fair value gap, the gap which is created from three candle series. The first candle, second candle left a gap, and the third candle starts here. So this is the gap between this point and this point. So this is a gap which was eventually CB. It should have originally been used to send price lower, but We disrespected it by giving a close above this, retested, and then shoot higher to buy side. Came back all the way down to tap it. Also had the discount of this leg. So discount color. So from here to here, this is a swing leg. And if you're gonna measure the discount of this leg, price came back to that plus the 4 hour inversion, and then gave us the change in state on lower time frame, which gives me the daily profile for Tuesday, London reversal profile, and New York continuation. So price moves in three phases: accumulation, manipulation, distribution. Manipulation will be against the high time frame draw. If we are going higher, then where are we likely to manipulate? Lower, towards the sell side. We need to stop the buy orders. We need to grab the liquidity for us to move higher. So why price moves? There are four reasons. As I can show you through the demonstration. So very first reason is gonna be hunt liquidity, internal to external. So this is the external range liquidity. This was internal range liquidity. All of this is internal range liquidity. What is liquidity? Where we have buy and sell stops. I think I need to create a video on separate individual concepts so you can understand what I am saying in these videos. If you have any doubts or you don't know anything, just give me a comment and I will make a separate video for that in upcoming days or as soon as possible. Because I don't want you to stay in confusion and me thinking just that I'm just explaining everything perfectly, but you're not getting shit out of that because you don't even know the concepts. So just give me a comment that you don't know about this concept and I'll make a separate video for that. Or shoot me a personal DM. I can have a live call and then we can chat about that. So market moves for four reasons. First, to hunt liquidity, which is buy side, sell side, internal to external, external to internal. Second, rebalance to discount. Price has to move from discount to premium. If you're gonna mark the fib from this level to this, where do you think discount is? Below 50%. So price has to offer the 50% where the market maker can buy and add on to his longs and then take it higher. Imagine if it goes higher and then from here just goes higher. It would never come back to give you the second entry. That's how market doesn't work. Market works in the phases. So first leg expansion, pull back to discount. Second leg expansion, pull back to discount. Third leg expansion, pull back to discount. That's how market moves. Higher high, higher low, higher high, higher low, higher high. This is like the trend creation or the trend on high time frames are formed. And price is fractal. You can see that same signature on every single time frame. So where I'm taking you through this is market moves for four reasons. Here today in London session, it moved to rebalance to discount, came all the way to 50%. Plus, we also tapped the 4 hour fair value gap and then instant change in state of delivery. What is a change in state of delivery? When we give a close above opposite side candles. So if we are going in a bullish trend, then what is the opposite side candle gonna be? Which is gonna be the black candles, the bearish candles. So once we flip this whole move, so you will see 1 a.m. we had this down close, tap into discount. Plus there was this 1 hour fair value gap, order block, inversion. All the PDRAs are aligned. Everything is in position. This is liquidity influx time. 2 a.m. open, London open. Market gets liquidity injection, starts to move higher, give another hourly inversion and closes through this, converts it into a order block and gives you a change in state of delivery. It was sell side, now it's going for buy side. Also, you can call it a market structure shift. Initially, we were going lower. Now we are shifting the structure to go to buy side. Where is the buy side? Previous daily high, where the sell stops are resting from yesterday. And how you can anticipate that after giving this change in state, price won't come back to stop you out. It can, but there is a 70 to 80% chance that it won't, because it already shifted the structure. It doesn't need to go now again to sell side and then go higher. In high resistance condition, it can do that, but why not today? Because price is in rush to reach for this. See, after this change in state, we had these two down close candles and gave you a order block close. So this is an order block, 8 a.m. open, shoot, strong displacement, expanding higher, closed higher, way above than this. Second 9 a.m. candle opens, boom, shoot to previous daily high, the daily fair value gap which was not tapped from previous day. So we reached over there. We had rejection from there at 10 a.m. and then pull back to this fair value gap. Why did we pull back to this fair value gap? Rebalance to inefficiency, this 1 hour fair value gap. So we took the buy side liquidity, rebalance to inefficiency, or rebalance to fair value gap, or rebalance to discount. That's the market phase. Market moves for four reasons: pull back to discount, pull back to inefficiencies, hunt liquidity, or generate liquidity. So my entry is after market open because I hardly trade London or pre-market. So my entry is gonna be after market open. But there was no clean entry offered, but I still tried to long twice when setup was presented. Eventually got stopped out, and that's totally fine. That's part of the game. Market opens 9:30. We had this rejection wick, pull back to 15 minute, and had an internal SMT over here. SMT is when divergence is created between two assets, which is the correlated asset of NQ is ES. So ES had this something like this. The candle never came to tap this fair value gap, while NQ did tap this fair value gap. Lower time frame had that rejection wick and closed higher, strong closure. But and we were close to the previous daily high, so we shoot through that high liquidity level, or a session, or it's a daily high where lot of sell orders are resting. So price has this explosive move. Then I'm waiting for any continuation long to the next buy side target, which is this buy side level. From the charts I can pull. So this is the next level I was looking for, that price will reach into that, but we had this pullback to 1 hour minute fair value gap, inverse that, and dropped all the way down to 9:30 open, had another SMT at the low, a strong candle, another change in state, CIST, a fair value gap open, but there was this 3 minute fair value gap which I was looking. If we can invert that, then it's gonna be high probability. This was the fair value gap which I was looking for the price to invert. After we had the inversion, I tried to long on So you can see this was my long setup. We had this liquidity raid and SMT created. My initial long is after this 3 minute inversion and this order block closed. So somewhere around here was the first entry. I added and then added one more and then eventually tried to reach higher but failed and then stopped me out. Then tried one more time once it had the inversion, the change in state, pull back to this fair value gap where my entry was, and it just clicked over there and then stopped me out as well. So there were two stop losses I took, and overall I was down $275 on the day, which is not bad. I'm trading 20 Apex accounts and copy trading those accounts. These are evaluations, and I'm down almost $300 on all of them. So I'm taking it low risk at the moment because we are in daily consolidation range. Second, tomorrow is FOMC. Third, price is in high resistance because it is being held. War is going on Iran between Iran and US, Russia, Ukraine, Israel, and other tariff situations. So all of those uncertainties, geopolitical tensions are impacting the market, and also it's impacting the indexes, which is Nasdaq and S&P 500, and all the commodities are also being affected by that. Gold, oil is shooting higher, silver rally. So all these things together combined making it low probability. So I reduced my risk almost to $200 or $300 per day, which is my accepted loss. I take two trades. After second stop out, I close my system because when I get stopped out on two models, it means that my edge is not present or the market maker is not allowing the price to move freely, and it's gonna be against me and I might hurt myself and lose more than I should have. So it's better to stay out. See, I know when to stay out, what conditions are bad for me, what conditions are not gonna pay out according to my strategy, the data. And not every day is a trading day. So all these things in combined, I have seen this multiple times. Like I've been trading for last 3 years every single day. So when this kind of price action comes, I have my low risk. There were certain days that where I was risking more, and honestly speaking, it did hurt me a lot of times. I have blown hundreds of accounts just because of these days, because in a expansion move or in our daily expansion, price is free. It's gonna respect the PD array. It is gonna give clean entries. But right now it's not as clean as it should have been. So I'm being low risk, and rest we will see how it goes. So yeah, that was it. And now you can see that we are just accumulating, generating liquidity. See, so this is a 10 a.m. candle. And if I can mark the range of the price, this is not this scale. Yeah, since open, we have this 163 points move. That's literally insane. How you can even catch a move? Maybe 50 points, 60 points, but that's also in high resistance and it's gonna hurt you. Look at those past 2 days. When price is in expansion, the average daily range is about this much. So 500 points. It's easy to capture a 50 to 80 or 100 points move out of that. But what you can do in this situation when price is only moving 140 points or 160 points. These 2 days are high resistance condition. And we had the clean price action before market open. See, London reversal, change in state, order block close. 8 a.m. and 9 a.m. candle has two big explosive moves back to back. It's like 300 points in 2 hours. That was the real move. And after that comes his consolidation because price moves in phases. Expansion, consolidation, expansion, consolidation, retracement, pullback to discount, change in state, expansion, consolidation. Now, what will come? I don't know. Right now, it is respecting 1 hour fair value gap. It has flipped all the bearish fair value gap, turned them into inversions. So, likely it is possible we might come back to discount of this whole move from today, London low to New York high, pull back to discount, have some sort of manipulation, shoot to buy side. That's the closest level. Or respect this daily fair value gap, which we are in right now. Have this initial move in London going into Asia and New York Open, and then generate the liquidity and then shoot to sell side. So I'm being patient. Tomorrow is FOMC, and I will be back with another recap or a market analysis. I'll try to post a market analysis before FOMC, like a short one, 3 to 5 minutes, so you can get the idea of what I'm looking for. And then a post market recap of what did I do, if I took any trade, what I was looking for, how did it go, stats, what did I made over 20 counts as I'm recording all of my journey of this 0 to 100K this year. So everything I'm trying to be as transparent as possible. I'm showing you every single thing, the executions, the number of trades, what did I took, how I took, stopped out, profit hit, every single thing. So if you like it, please like, share, comment, subscribe to my channel for the upcoming videos. I'm making a whole 3 to 4 hour video in which I am gonna explain every single thing from top to bottom. How you can start trading, day trading, especially in 2026. The brokers or the pro firm which are best you need to use, the strategy, the concepts, all of those things. And then after that, I will start a series of individual concepts. What is a fair value gap? What is a inversion? What is a breaker, change in state, liquidity, daily profiles, weekly profiles, how to find a bias, risk management, psychology management, time of the day, macros, when price is moving, why it's moving, where it is most likely to go, all those things, the correlation, SMT, correlation between the assets, Nasdaq, S&P 500, and Dow, YM. All of those concepts are in my head, and I have been planning from a long time to record them and publish them and share my experience, what I have learned from those concepts from those concepts in last 3 years roughly. So stay tuned, and I will be back with another video. Thank you. I know you might feel that I'm not that good with recording, editing. I know. It's fine because I just started posting and it will get better eventually. And I'm not an editor over here, I'm a trader. So I'm trying my best to do as much as I can and sharing it with you guys. Over time, I might hire someone to edit, or I need to learn like proper editing. Please forgive me about that. So thank you so much for watching and see you in the next one.